Hi everyone, Michael from Bullion Now, bullionnow.com.au. So we're in interesting times in uncharted territory. We've hit all-time highs, both for gold in Australian dollar terms and in US dollar terms. So well and truly through that 2200 US marker. So as an established stacker, or as a new stacker, we want to know, why has this happened and what are you going to do about it now? How does it impact your stack, both the one that you've already got, but also the one that you might be stacking further into the future? So let's deep dive into that right now. So lots of people taking different views of what to do right now. Even within our store, we're seeing lots of people selling back into the store, so stuff from their stack that they've collected over the years. But we're seeing a lot of new people, or a lot of established people, also coming in and expanding or beginning their stack to move forward. So there are all sorts of reasons, whys, hows, and things that people are talking to us about. So we thought we'd take a bit more of an in-depth view. Starting off with one of the common ones is central banks. Is the central banks around the world buying, is that massively affecting the price? Because we've seen articles recently about India upping their intake from their central bank. China is always mentioned. There's always the rumours of some of the other countries as well increasing their gold holdings. Now look, the central banks have been buying for many years. So I don't think, while retrospectively we can say that it is actually supporting the price, I don't think it's driving the price very much higher, because that central bank buying has been there for a number of years now. And it's great to see their accumulation of it. It's great to see that diversification away from the standard US dollar that it's been traditionally. And it's also great to see central banks actually recognising and putting in physical product into their reserves, so that there is physically something there, that governments are starting to look at doing those types of things. Is it driving the price higher? I don't believe it's massively impacting the price to a higher degree, but I absolutely believe that it's supporting the price of where we are now. So the other hot topic is obviously interest rates, and how is that impacting the gold price. So we've seen, going back a little bit, the last decade or so, interest rates have been quite low, and that has absolutely supported the gold price, because you couldn't get much interest in the bank, so you'd roll it into gold. It was a fairly low risk return there. As we've seen in the last 2 years around the world, interest rates have massively increased proportionally, and the assumption was that gold would take a hammering of that, because you can get a better interest return on your money in the bank. Excuse me, but that's not what we saw. We saw a lot of people de-risking by holding gold, and also recognising the fact that we had higher interest rates because we had higher inflation, and gold does better in a higher inflationary environment. So that has obviously driven the price upwards, or helped support that price. Now we're coming to what's expected to be the end of those higher interest rates, and we're starting to see gold actually increase again. Now, part of that is the anticipation of rates going back to where they were, and so, well, if I can't get a decent rate in the bank, I might as well put it back into gold again. But I think there's more to this than just that basic assumption. I think we're also seeing that major deleveraging away from the banks. We don't want to hold as much cash in the banks anymore, because we don't like, as a society, and this isn't just Australia, this is around the world, we don't like what the banks are doing, we don't like what the governments are doing. So we're going to take control back, and I think that's holding the price up and increasing the price, as well as the fact, absolutely, as well as the fact that the interest rate decreasing means that I don't have to worry about the return from gold quite so much. So this one's a bit of a double-edged sword, and it worries me a little bit that if interest rates stay higher for longer, which is certainly possible, that maybe we might see some heat come out of that interest rate price drive that we're seeing. But I don't believe it'll be a lot, and if we do see a bit of a kickback from that, I don't think it'll be very long-lived. Now, you can never have a discussion about gold without referencing the geopolitical environment. And around the world, we're seeing more and more unrest around the world, whether it be just grumblings of it, or whether we're seeing outright conflict. The obvious being at the moment, Russia, Ukraine, and the Israel-Gaza Strip areas. So this is not any form of political statement. I don't want anyone to take it that way, but that civil unrest, that uncertainty, elections in Russia, the upcoming election in the US, will Trump get power, will he not get power? All those types of geopolitical divisions are always a reason to move towards gold and that security of gold. And absolutely, you can see direct correlations to that in different share prices, different spot prices over time. And absolutely, that's having an impact on the current price that we've got at the moment. The kind of new influence, it's not a new influence, but it's kind of a revived influence on the gold attitude that we're seeing out there is what I'm terming the cool factor. More people are becoming aware of gold. More people are becoming curious about gold. They're wondering how this fits in my investment package, how this will work out in the future, how it gives me more security, and it's becoming more an interest point. I'm getting more and more conversations at family barbecues and times when I'm out. Generally, where people say, "Oh, you deal in gold?" I've only just started becoming interested in it. So it's becoming a more cool, a more talked about, a more socially acceptable investment than it was even 5 to 10 years ago. So we're seeing a greater interest in a broader spectrum of people coming in from different markets that we wouldn't normally see, younger generations and things like that are educating themselves around gold. And that is absolutely driving the demand and therefore the price of gold upwards. So with all those things in mind and many, many, many other factors that are playing on the price of gold, what should you do now? Are the people selling at the moment correct? Are the people buying at the moment right? Or is it a combination of both? And that's actually what I would suggest. It's a combination of both. So we're at an all-time high. In the short term, are we likely to see a correction? It's entirely possible that we will see a correction in the price, both in Australian dollar terms and also in US dollar terms, or in local currency terms if you're not in Australia and the US dollar terms. Longer term, will we see an increase in price? Yeah, absolutely, I believe it. Now, you've got to lay over all of this that this is not financial advice. I don't know your circumstances specifically. This is just one person's opinion on the internet. But if we go back over history, over many, 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 many years, almost as far back as you want to go, you will see that gold trends upwards over time. Yeah, it comes back a little bit and then it'll march on upwards ever higher again, and then it'll ease back a bit and march onwards. And there's no reason at this stage, there's no indications to show that that will change. So if you're looking at a short-term option, maybe this is a time to take a profit. If you've already got a pile, maybe it's a time to, I wouldn't say stop buying, but maybe just pause your buying a little bit or reduce the amount just to keep some powder dry, just in case it comes down a bit further. Longer term though, I would say from my perspective, my opinion, and remember again, this is opinion only, that if you're holding a stack, don't get rid of it all. Get rid of, if you want to take a profit on some of it, but hold some of it, because I think in the longer term, we're going to see that trend upwards. If you're just starting out and thinking, oh no, I've missed it all, don't stress. Just come in slowly to the market. Don't let anyone say to you, oh, you've got to buy today because it's going to triple tomorrow. Don't believe that sort of stuff. But stage into it. Say, well, look, actually, I've got an interest in this. I think it's an important part of my investment portfolio. It's a great insurance policy. I've done the research into it. I'm going to commit a component, a small amount, 25%, 50% of my investment that I'm going to do right now. I'm going to purchase some gold and I'm going to put it to the side, and then I'm going to wait and see. And if the price comes down a bit, well, I've still got some dry powder. I can still go in and buy some more at a lower price, and I haven't committed everything at that higher price. Or alternatively, I'm wrong and the price goes up. Well, I've still got some more money. I can still buy some more. Yeah, I'm paying a bit more for it, but I've got that other stack that I paid a cheaper price for. So you get the best of both worlds then. You're averaging in, not committing boots and all right straight away, but you're easing yourself in gradually. So look at it over time and work out how much should I commit to it? Work out, should I be selling some for yourself? I want to take a bit of a profit. There's nothing wrong with taking a profit. No one ever went broke taking a profit. Or should I stage in a bit more? That's it for now. If you've got any questions, feel free to put them in below. We'll certainly try and comment on them. If you'd just like to make a comment, they're more than welcome to. We'll talk again very, very soon. See ya.